Rents and interest rates have a bit of a complex relationship because they can drive each other. If rents rise, that can cause inflation to move higher, which can actually prompt a response of rising interest rates. But at the same time, rising interest rates can also deter new investors coming into the market because it's increasing their cost. So increased rates can also increase rents as a result of that. The important thing to note, though, is that they do tend to move together over time. So if we do get to a peak in interest rates and they start to fall next year, the good news for renters is that growth in rents could also start to come down.
Rising rents may have helped to fund higher mortgage costs. Is it clear whether increased rents are covering the interest cost increases in their entirety?
I doubt it, and I think we tend to overstate the relationship between rental income and investment activity in Australia more broadly. Some of our biggest investment markets in Australia actually have very low rental returns. You think of Sydney and Melbourne, where gross rent yields can be between 3 and 4%. A lot of Australian investors are actually negatively geared, meaning rents don't cover their interest costs. And more recently, the sharp rise in interest rates is likely to have seen interest costs far outweigh the increase that we've seen in rent incomes.
Market expectations are we're not far from the peak of the rate cycle. What is your forecast of the trajectory of rates from here?
I think it's understandable that forecasters are calling rates to actually come down in 2024. Households are really starting to feel the pinch of higher rates at the moment, and we should start to see inflation unwind more rapidly as a result. Again, this could be good news for renters because falling interest rates should coincide with a continued moderation in growth in rents. We've already observed this. Annual rent growth nationally has fallen from a peak of 10.2% over the year to December 2022 and is now down to about 9.7% over the year to June.
Can you pin any slowdown in rental price growth to the RBA's recent advice to take in a lodger or form a share house to ease cost of living pressures?
I think that the tenant response is probably the first thing to occur in this kind of market. Supply isn't delivered as easily because of constraints in the construction sector, and also high interest rates have broadly brought investor activity down. So it makes sense to me that one of the first reactions we'd see to tighter rental affordability conditions would be a reformation of share houses. It's worth noting, though, that even on the speculation that interest rates are near a peak, we've started to see investor activity ramp up again. The amount of secured finance for investment housing increased about 10% from a low of February this year. So that suggests to me that investor activity and supply of rental housing is also now on the rise.
And so is an annual decline in rent values possible, or is rent growth expected rather to moderate from recent highs?
Based on historical data, just a moderation in growth seems more likely. We've actually never seen a decline in rent values nationally on an annual basis. There are some markets, though, that are in decline. Canberra's down about 3% in the past 12 months, albeit off the back of a 17% rise since the start of COVID. And we've also seen some regional markets like the Southern Highlands and Shoalhaven, regional Tasmania. These are areas where rents have declined in the past few quarters as well.
Eliza Owen, thank you.
Thank you.